Hey there, welcome to Commodities. A lot going on in the energy market, and we're going to have deep analysis on the show today. Let's check in on oil, and you can see oil now down. There are fears, though, that these indirect talks between Iran and the US in Geneva, mediated by Oman, have been stumbling. And of course, if that happens, it would tend to possibly lead to a U.S. attack on Iran, disrupting flows of crude from that major exporter. Remember, U.S. President Donald Trump has ordered a massive military buildup in the region. But oil, after quite a rally over the past few weeks, giving up a little bit of altitude right now. One market watcher, though, talking to Reuters, said, quote, media reports seem to show that things are not going so great in Geneva. We could be reaching the end of the road in terms of hostilities between Iran and the U.S. New York Times had a very good article last year on Iran's nuclear program. Of course, it began as a power program, but the Shah of Iran, who was ousted in the Islamic Revolution, openly said, yeah, we probably will build weapons. Interesting point here is that it's deeply embedded in Iranian history and a sense of security. And even people who oppose the regime, apparently, in Iran do take pride in the program. Remember, Iranians feel they've been mistreated. They've been subject to attacks and sanctions for years. So the nuclear program is something, it sounds like it has wide support within Iran. But of course, that was the New York Times take at that stage. And let's have a look at the metals market here. And you can see gold actually slipping. Again, gold has had quite the run over the past few weeks, but losing a bit of altitude today, and it's near record highs. Intriguing story from Bloomberg that central banks increasingly view exchange-traded funds as an easy and effective way to boost their exposure to gold instead of buying gold and piling it. I mean, you think of central banks as having these huge vaults full of gold bars. Apparently, according to investment manager Invesco, these institutions like the ETFs because they can quickly increase and cut their exposure to gold. And it's also discreet. They got relative anonymity if they go into and out of gold using the ETFs. And of course, broadly over the past few years, with a weakening US dollar, central banks have been adding to their exposure to gold, and gold already up about 20% this year. And then a very quick look at the agricultural commodities, and you can see, wheat gaining and corn under a little bit of pressure right now. Some other resource-related stories we are bringing you. Shares in Canadian Utilities under pressure. That company posted net income for its fourth quarter that missed estimates. Revenue also disappointed. The utilities firm said the results stemmed from regulatory issues, as well as the wind down of a 2024 efficiency program. And there was a write-down of assets in its Alberta portfolio after repeated power curtailments due to weakness in the province's electricity grid. Wind power giant Northland Power is seeing a rally in its stock right now. The company issued a profit forecast for 2006 that topped expectations. 2026 that topped expectations, and revenue and profit to beat analyst forecasts in the latest quarter. And the world's biggest cocoa producer is changing its calendar for the commodity to curb smuggling. Bloomberg says Ivory Coast in West Africa will move its next crop seasons a month earlier to help curb an influx of smuggled beans. The crop will now start on March 1st instead of April, and the main crop, so-called, will start in September. Pushing the harvest forward will allow Ivory Coast more time to sell its beans and better control beans smuggled in from other nations. So let's have a closer look at oil. The US and Iran are holding these high-stake talks in Geneva over Iran's nuclear program, and under the auspices of Oman. There are fears, of course, that the Americans, who've got 2 aircraft carriers, multiple other military assets in the region, are set to launch an attack on Iran to increase pressure on that nation to abandon or at least curtail the nuclear program. Let's get more from Matt Smith, lead oil analyst at Kepler. Matt, thanks very much indeed for joining us. I know following oil daily fluctuations is a mug's game, but is there any particular reason why oil will be down today?
We've been up, we've been down, we've been up, we've been down today. It's like a yo-yo, right? It's just moving on sentiment. But I think the broader picture, Andrew, here is you buy the rumor and you sell the fact. I think there's just the risk of an incursion by the US into Iran. It appears that the talks in Geneva have not gone well. So from that perspective, it seems as if a strike is going to be more likely than not. President Trump has given 10 to 15-day window, right? He said that about a week ago. So we have the expectation here. He doesn't talk in riddles. He's fairly straight in what his opinion is. And so everything he's been saying in recent days, he wants to see Iran coming to the table, drawing back on those nuclear ambitions. If they're not willing to do that, then there's going to be an incursion. And that's basically what it boils down to here, right?
Now, we've seen interesting behavior from countries under sanctions. Let's start off with Iran. Iran has lately been accelerating exports. Is that trying to get crude out of the country before an attack?
Yeah, absolutely. That's what it seems, right? So typically we see them loading about sort of 10 to 12 million barrels each week. Last week, we saw them loading over 26 million. So they're rushing these barrels out of the country here. And so that's just a signal that they are preparing for some type of escalation in the situation here. The thing to bear in mind with this, Andrew, is that Iranian crude can only go to one place. There is only one buyer, which is China. And so it's likely that these tankers are just going to head and sit offshore Malaysia, offshore China there, and wait for China to buy them. So they're getting out of the Mideast Gulf, but it appears that they're doing this because of a risk to their country, as in terms of Iran, as opposed to them looking to try and close the Strait of Hormuz.
And vast amount, and China has been bringing in more Russian crude. They have been a huge buyer of Iranian oil, though, as well.
Yeah, exactly. So they've been basically the only buyer of that Iranian crude, right? And so we see 1.2, 1.3, 1.4 million barrels a day being discharged. But they have dialed back on that, Andrew, in recent months here. And we've been seeing that crude instead building up offshore China. But to your point, in terms of the Russian flows, you know, we've seen India pick up so much of that crude in recent years here, up to sort of 2 million barrels a day of Russian material going in there. Now, India has dialed back because of pressure from the US government on them. We've seen those deliveries drop by about 500,000 barrels per day. Guess what? We have seen a pickup into China in particularly this month of about 500,000 barrels a day. So it's those Urals that are going from kind of the Baltics, the Black Sea there, all the way to going to China. So a long journey, but there's a huge discount for this crude simply because there's really nowhere else for it to go. So there's a common theme about these countries we're talking about, right? Iran, Russia, Venezuela has been taken out of the picture somewhat here, but they are discounted barrels of crude because they have very few destinations that will buy them.
The Saudis, meanwhile, have been exporting more crude as well.
Yeah, they have. So we have seen them pick up by about 400,000 barrels a day so far in February here, and we're about to close out the month. And so that's a trend that we have seen over the last kind of 4, 5, 6 months, something like that, where in September, we really saw Saudi crude exports pop by about 1 million barrels per day. And then we've seen them holding around 6.5 million barrels a day in recent months. And now they're up close to 7. Now, the thing to bear in mind, some of this is to do with seasonality as they burn less for power generation at home during the winter. That said, it is our expectation for Q2 and Q3 here that we're going to see OPEC unwinding production cuts again. Bear in mind, Andrew, they've paused for the first quarter of this year, but by all means, they've got to be fairly delighted with where prices are right now, given the expectations of such a supply glut coming into this year. So our expectation, they're going to be able to increase those exports potentially further as they unwind cuts.
Yeah, there's talk of possibly an OPEC production or production increase in April.
Yeah, so that's what we're looking at here. And so just Q2 and Q3, they've had these tranches. It's all been very complicated how they've layered these in. And so they've unwound that first tranche. They've been unwinding the second tranche, but they've hit pause on it. But we expect them to start that back up again. That will clear out that tranche there. It will just make things that much clearer. And then going into next year, the outlook for core OPEC in particular, Saudi Arabia, UAE, Kuwait, is going to be much better here as they are putting more barrels onto the market. They're claiming back market share, but they are also the ones with spare capacity, whereas others in the world just simply do not have it.
And what about Cuba? Now, Cuba's had this awful crisis with oil, but some Venezuelan crude has been making its way there, even though the Americans control Venezuelan oil flows.
So it's been paused for the last couple of months, Andrew, but traditionally Cuba has relied upon Venezuela for Mexico for all of its crude needs. Venezuela also supplies clean products in there as well. But as we have seen with the US putting pressure on Venezuela, not putting boots on the ground or putting military pressure on them, but simply pressuring them via energy, using that as a weapon, the US is doing the same thing with Cuba. Now, Cuba has had its deliveries halted. And so basically, you've had flight cancellations, you have public transport that isn't working, you've got schools closing, you've got government workers furloughed, all these things because they're basically being strangled off from having that energy. But now the US has come out and said, okay, the private sector has the ability to now buy this Venezuelan crude. And let's not forget, it is the US that is basically operating the situation on the Venezuelan side of things in the background there. So they are holding the power, and so this is going to be somewhat to the benefit of the US being able to control those flows. Because one other thing, Andrew, we have seen a tanker that we saw a ship-to-ship transfer in Cyprus in the lightering zone there. So it's probably picking up Russian diesel. It was heading towards Cuba, and then yesterday, just before this news came out, that tanker halted and it has stopped in the mid-Atlantic here. So all changes, all going on, all relating to sanctioned tankers and sanctioned crude, right?
Yeah, they didn't want to get seized by the U.S. Coast Guard or military. Yeah. Matt, always great talking to you. Thanks very much indeed.
Thank you.
Matt Smith, lead oil analyst at Kepler. Up next, it's Ramadan, and when people break their fast, they often tuck into dates. This is a gigantic global market. We'll have more, particularly the importance of this to Egyptian agri-food exports. That's ahead. People observing Ramadan are tucking into dates this month when they break the daily fast, and that's good economic news for Egypt. Bloomberg calls dates a, quote, gooey brown superfood. It's a huge global market. It tops $29 billion US, apparently. And Egypt is the world's biggest date grower, has a massive population, of course. And it racked up in 2024 about $105 million US from date exports. It produced about 2 million tons of dates and shipped about 88,000 tons domestically. Nearly all of them were consumed. It's the world's 8th biggest date exporter. The Saudis and Iran are apparently in the lead. The world produces about 10 million tons of dates each year. It's interesting, in Egypt, they used to have the farmers, didn't get much support. There weren't modern storage facilities, but the government has pressed ahead with industrial cold storage units, and that has helped the farmers harvest them and sort them for quality, and that's facilitated exports. Dates, I was just curious, are they good for you? Apparently, you could call them a superfood. They've got lots of antioxidants, as well as flavonoids, substances that are good, help repair DNA damage. And they're a good source of copper, other minerals, but particularly copper. And apparently just 2 dates have about 3 grams of fiber, depends on the size. That's a lot. It's a little over 10% of the daily recommended amount. So they are sugary, but because they got all that fiber, it's worth eating the sugar. And some nutritionists say when you get that afternoon craving for something sweet, reach for a date instead of chocolate. Up next, Enerflex stock has been on fire. This is a diversified supplier of equipment and services, particularly to the oil and gas industry. The shares have been soaring. We'll get more from an analyst who says the stock still looks like a buy. We'll be right back. Shares in Enerflex have been on fire. It's one of the biggest gainers in Toronto today, and it has surged over the past year. Look at that, up almost threefold. It provides services to natural gas and oil producers, a wide variety of engineering goods and services. And the company has named it his top pick in his energy services coverage. We're joined by Aaron McNeil, research analyst at TD Cowen. Aaron, great to see you. Thanks for joining us.
Yeah, thanks for having me on, Andrew.
Just remind us, what does Enerflex do? What's its main business, please? Because they're pretty international. Sorry, go ahead.
Yeah, no, sure. It's a effectively they operate in the natural gas compression, processing, and more recently the power generation sectors, I guess. They have several paths to market, so they own and operate equipment. They can repair equipment for you, and they can build and sell you equipment. So they operate in, I think, soon to be 14 countries, down from 17. But so pretty product line and geographically diverse company.
And why has the stock done so well?
Yeah, it's a multitude of factors, but I think what's really driving the stock today is the sort of new disclosures around their power generation opportunity. In the disclosures, they talked about 1.5 gigawatts of potential orders, up from 500 megawatts last quarter, which was sort of the first time that they had outlined that. They also announced that they got a large order subsequent to quarter end, 2 smaller orders, and had sort of completed a feed study for another large order. And what we're seeing more broadly is anyone that can directly link themselves to sort of this data center and power generation opportunity are seeing strong share price performance on the back of that.
That's interesting. So are people buying into it because they might be providing power generation not just for oil and gas companies, but for data companies?
That's right. Yeah. So very high level, it takes, again, rough numbers, 4 years to build a big gas plant. And so what a company like Enerflex can do is build smaller, modular units. It's probably not as efficient or as effective from a cost perspective, but they can sort of deliver that to you a lot quicker than a big gas plant. And so for a data center that wants to scale quickly, this is an opportunity or an option for them to sort of get access to power.
So you're hiking your target. You were at just a $28 price target, but you're going to 39. So you do see upside here.
Yeah, I do. It's still our top pick. We reiterated that with the quarter. So again, a couple things. We're seeing broad multiple expansion across energy and funds flows into energy. So Enerflex benefits from that. We're also bringing up our estimates. And I think just more broadly, Enerflex just has not had the valuation that it really should. I mean, if you look at the business, half of it is contracted cash flows. You can get up to sort of 2/3 of the business that's either contracted or recurring cash flows. And, those similar comps that are in that realm trade at 10 times. This trades at 6. And then the remaining sort of third of the business is a manufacturing business with, as I mentioned, this power generation opportunity, which clearly has lots of growth. And so at a time when there's really not, a lot of value in energy or candidly anywhere in the TSX, this company does stand out to me. And I do think there's still lots of room here to go higher.
That's interesting. Just because the stock's gone up, it doesn't mean it can't keep going up. Yeah, people sometimes sell their winners. And just remind me, do they actually make the generators themselves, or do they buy them in from outside sources?
Yeah, so what they'll do is they basically package it, and so they'll buy, as an example, an engine from Cat, and other components and package it together.
Right. Aaron, fascinating stuff. Thank you very much indeed for joining us.
You bet. Thanks for having me on.
Aaron McNeil, research analyst at TD Cowen. Okay, here's a cautionary tale for companies that want to make their foods sweeter, or not sweeter, but healthier. Red Brown of Bloomberg is a great story about Sweetgreen, which is a chain in the United States that touts the healthy nature of its food. And Wall Street got all thrilled about these so-called healthy fries. They're crinkle-cut potatoes, and they were air-fried in avocado oil. But the staff said, no, it's too labor-intensive. We just won't be able to keep these things tasting good. They go soggy too quickly. But senior management, led by the CEO, Jonathan Neiman, said, oh, that's nonsense. And they were encouraged because every time they mentioned what Bloomberg calls this fast food moonshot, the stock went up. But the poor workers had to scramble with constant preparation to keep the fries hot and crispy. Frying the things in lard actually works better. Sweetgreen just went public actually in 2021. And by fall, the company just gave up and they pulled them off the menu. Now, executives like other restaurant brands have said, well, young people are cutting back and going out to eat. They've been hit with a lettuce shortage. But Bloomberg says they also underestimated logistical and operational complexities. They say, well, we've got high quality ingredients, compostable packaging, but that has prevented them from turning a profit. And customers say Sweetgreen doesn't taste as good as they remember. I like this one 25-year-old eating in LA at a Sweetgreen. Is this Gen X talk? She said, it used to hit. In other words, tastes good, but now she says there's a quality difference. It used to hit. So this lady, she works in social media. She said, Sweetgreen, it's satisfying, but it's not $20 satisfying. Anyway, there's a cautionary tale. Fries are deep fried in lard for a reason. Okay, we're out of time. Let's have a quick look at the oil price once again. Oh, I hear the music. Oil, interestingly, down today, despite fears that America is poised to send in the bombers and the missiles to put pressure on the Iranians. But in any case, it's had quite a rally off its lows of 2 months ago. Thanks very much for watching Commodities, and we've got the close coming your way next.